Hello and welcome to Crux Investor. We're going to talk in a minute with Mark Chalmers, the CEO of Energy Fuels. They're listed on the TSX and in New York. We are going to ask about their performance last year and their plans for this year, and of course talk about the state of the uranium market. Hello Mark, how are you?
Good afternoon to you, Matthew. It's morning here in Denver, Colorado.
Of course. Thank you for joining us so early. So Mark, I wanted to start off by finding out a little bit about you initially, and then maybe you can talk us through some of your team so we can understand the people behind the business.
Yeah, no, that's great. Well, firstly, I've been in the uranium business for over 40 years. I started in the 70s as a uranium miner, and I worked underground in mines in Colorado. And I loved it so much. Next thing I knew, it was 40 some years later and I'm still in the business. So I'm a mining engineer. I've worked around the world with all types of projects, in the United States, in Southern Africa, in a number of countries, in Australia, and Kazakhstan. And so I've really seen the uranium industry from a number of perspectives that a lot of people haven't. Because I've seen it globally.
Right, and so given that experience, that global experience, what were you brought specifically on to do in this company?
Well, I had worked with a number of these assets at Energy Fuels back in the 70s and the 80s. I've got dual citizenship. I went to Australia for half my career, and the CEO of Energy Fuels was a friend of mine, and when he was getting ready to retire, he asked if I'd come back and run these assets with the knowledge of the past and, kind of my global perspective. So I saw Energy Fuels as the best vehicle out there in the world, out of the whole world of uranium. And that's why I came back. I saw Uranium One and the Paladin Energies emerged in that 2005, 6, 7 period as the two darlings during the last upturn. My key focus is, driving towards profitability. A lot of these smaller mining companies never actually achieve a profit.
Who are the other kind of active key players rather than advisory?
We have Birks Bovaird is our chairman. Birks was an MD of ANZ Canada for a number of years. We also have Bruce Hansen, who's a mining engineer, but also was the CFO of Newmont. For a number of years, and I go back a number of years with Bruce. Barb Filas was the first woman president of the Society of Mining Engineers in the United States. Actually, I went to school with Barb. And then we have a couple of our major shareholders that have also come on as board members because they have a fair amount of skin in the game. Dennis Higgs, who came out through the acquisition of the Uranics merger about 3 years ago. So we've got a very good board. It functions well. I've worked with a lot of boards in my career, and I find this one is providing me the support I need as this company is placing itself for the future.
Right. You're happy with the board. No new additions required to take the business forward. You've got the team you need.
In addition to the board, we have what I believe is the most experienced uranium production team out there in the space, particularly here in the United States, with Paul Goranson. He used to be the president of Cameco USA, of their assets. And Dave Friedland, our general counsel and CFO, has been involved in the business for about 30 years. So, we have a very strong front line with the company. And as I said earlier, I've been involved in the business for over 40 years. So, and the last thing I want to say about experience is I tell people that I've had the opportunity and pleasure of working with some of the greatest entrepreneurs in the uranium business in the world over the course of the 40 some years I've been in the space. And I've learned what they do right, but I also learned what they do wrong. And I'm very conscious of how we build the company.
Well, let's talk about that. So what are the things that you think the entrepreneurs you've worked with have done right and the things that they've done wrong. What have you learned to be able to create what you position as US's #1 uranium business?
One of them is to buy right. You want to, get the companies needs to be placed, early in the cycle, acquire the right assets, good assets. I've seen a number of train wrecks where companies over leverage on debt, don't secure long-term contracts, or get caught in foreign exchange movements or some combination thereof of all those. So, but I think the key thing that I've learned with the entrepreneurs I've worked with is that you've got to be aggressive, but you can't be reckless. And when you start becoming reckless, you start putting your shareholders at risk. So I'm very much focused on being aggressive, doing smart deals, but at the same time not over leveraging, because it is a very volatile sector.
For sure. I mean, a lot of those things you could apply to mining in general. Are there anything specific to uranium?
I think one of the key things is the taking on too much debt, and also with uranium, it's possible to secure long-term contracts when the prices are high enough. I think the combination of those two, the lessons learned I've had over the decades is, you balance both of those, but you certainly don't take on too much debt without enough long-term contracts to sustain the business.
Right. Can you set the scene for the viewers about the uranium space? It's the history of the last sort of 10, 15 years. I mean, how have we got to where we are today?
When the gun went off in about 2006 or 7, price uranium went up very quickly. A lot of people were scrambling to get into production. It takes time in this business to get into production, to get the permits and get organized. And just about the time the momentum was kind of really starting to kick up, we had Fukushima, and that clobbered the industry. And when you have an event like that, that's when you're really glad that you did have long-term contracts for 5 or 6 or 7 years, because when the price started to slide, you were in a better position than having to pin it on the spot market. So I think that black swan events, which have occurred about once every 15, 20 years, take some time to get over. But when you start seeing the market starting to pick up, and the fundamentals starting, I'd say do not be afraid of securing long-term contracts when you can actually know you can make a profit off of those contracts. Sometimes the greed factor comes in. People think, well, the price is going to keep going up, 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 and I don't want to commit. But it's good to have at least a base load of contracts that will sustain you if the market then turns down for a period of time.
Yeah. So you got to where you stand.
Yeah, no, as I said, a lot depends on your balance sheet and what kind of debt you have. I think, and you're right. It doesn't just pertain to uranium mining. It's all mining, all business. You want to keep that balance. You don't want to go too extreme one way or the other.
Yeah. So now tell me, you use a phrase in your PowerPoint, which is the nuclear energy is growing at the fastest it has for the last 25 years. I guess you can work that out in a number of ways. What did you mean by that?
The nuclear industry kind of slowed way down in the 90s. You've seen this growth in nuclear power primarily in China and India, places like the United Arab Emirates. The forecast, the World Nuclear Association had a forecast, and it's in our presentation, in 2008. And then also one recently, about a month ago, so nearly 10 years spread. And in the middle of that, 2011 is when Fukushima happened, and their forecast from today as compared to 10 years ago is actually at a higher rate. Nuclear is going quicker today than it was before Fukushima in 2008. So, I mean, the growth has been fueled by Asia. I think it will continue to be fueled by Asia. Clean baseload energy, particularly in these developing countries that are dependent on a lot of fossil fuels. I mean, they're literally choking themselves to death in China and India. And they really have no option other than to go with a higher component of nuclear power. I mean, even if you get to the United States, and Europe, if you're concerned about global greenhouse gas emissions, you can't get there without nuclear as baseload. I mean, natural gas has done great things, but it still pollutes.
So there's a few. I mean, there's a few countries in Europe, Germany, France, being sort of high-profile ones, which are coming off of nuclear. But you're saying the various fleets around the world, and the Chinese market, obviously a growing fleet. The net effect is it's destined to grow, and therefore for uranium companies, it's all good.
The stronger the growth, the better. I wouldn't say it is dynamic growth right now, but it's positive. 1% or 2% a year. I think that can increase once again. I mean, some of the Japanese reactors are coming back online. France has kind of reaffirmed that their nuclear plans are at least still going to be pushed out. I mean, you hear a lot of countries talk about, oh, we're getting out of nuclear, and Germany is phasing out, but really, at the detriment of their emissions and the cost of the shareholders. So, there are some countries will do some funky things that don't make sense. They'll do it for political reasons. But again, as I said earlier, if you're really serious about a clean baseload energy, you cannot make up all the difference without nuclear as a key component. Not all of it, but a big portion of your power grid.
So let's talk about some of the political components here, because I think investors find it kind of interesting. Well, and there's some misconception out there. If you look at the US are doing a 232 investigation currently about imports of uranium. I guess that's possibly a good thing for you. Well, when is the result of that due?
The Section 232 petition was filed by our company and another Denver-based company called UR Energy. And we filed that back in January of 2018. It was initiated in July. Right now, the Department of Commerce is scheduled to deliver a report to the president on the 14th of April. So that's less than 4 weeks off. We do not know exactly what the recommendation will be. And just for people's information, Section 232 is a law as part of the Trade Act of 1962, which basically gives the President of the United States executive authority to deal with imports of goods or materials that could jeopardize national security for the United States of America. So we filed this petition under that law, the Section 232. So this report is being prepared currently by the Department of Commerce. We feel that this is a very solid petition. We think that the government gets it in terms of the importance of national security to the United States. And I've got one quick grab. The United States consumes 1/3 of the world's uranium, 1/3. We're the largest consumer by a country mile over any other country, and we're currently producing less than 1% of our requirements. Wow. 99% is imported into the United States. About half of those imports come from Russia, Kazakhstan, Uzbekistan, former Soviet Union countries, and there's becoming a growing influence with China. So, our petition says that doesn't make any sense. And we think the average American would say that doesn't make sense. And even anybody outside of America would say the same thing. So that report will go to the president. The president has a time clock of up to 90 days to either accept the recommendations, whatever they are, change the recommendations, or come up with something different. So there's a fair amount of excitement from U.S. producers, and we're asking for a 25% quota, which is 25% of our domestic power requirements are produced in the United States, and also that there should be an incentive by the U.S. Government to buy American uranium to basically ensure that we have a sustainable industry looking out to the future.
Great. Thanks for that. On the political side of things, just help people understand why uranium is classified as a clean fuel.
Yeah, no, look, nuclear has always been an emotional issue for people, and I think they associate it with, bombs. And, even if you look at the black swan events that have occurred, at Fukushima, for example, to this day, there has been no deaths from the nuclear reactor, issues that they had. There were deaths from the tsunami. There were deaths from people being evacuated, but there were no deaths from the reactor. And I think all projections that I have seen and heard, that there may be no deaths, or if there are, it will be a very limited number. Now, certainly, you don't want to, you want to learn from these kind of issues like Fukushima. And I think we have. I think the whole world has learned that you should have these reactors shouldn't be built so close to sea level. And like in the case of Fukushima, the generators should have been higher above to where they didn't get swamped by the tsunami. So nuclear has a fantastic track record for safety. And people will dispute that, but that is the facts. You look at some of the different organizations that have done post evaluations of Chernobyl. And Chernobyl was the biggest issue in the nuclear industry, with reactor designs that are no longer allowed to operate in the world. But you've got to learn from some of the past mistakes. And nuclear power, does not emit carbon emissions. It's proven as a clean baseload energy.
So can I again move on to? I mean, you're sitting on a lot of inventory at the moment, something like £430,000.
We're building inventory because we think that the current pricing of uranium, which is in between $26, $28 per pound, is not fair value for a pound of uranium.
Where do you think it's going?
Well, look at the cost. The cost of producing a pound of uranium is north of $50 per pound, probably $50, $60 a pound. That's what it costs to produce it. The current pricing, a lot of that uranium is because of over inventories that some of it slushed up after the Fukushima incident and the shutdown of the Japan reactors, and a lot of the uranium that's come out of some of these state-owned enterprises. So yeah, we're building up our inventory. We think that we get relief under Section 232, that the price of uranium will go up, and then that will be something that we can use to continue our operations, getting hopefully a bounce out of the uranium prices.
Yeah, obviously that decision is imminent for you. So you continue to produce. I know you're sitting in a lot of cash, you're continuing to produce, and you're continuing to stockpile, as are other uranium producers in a hope of affecting share price, I guess. Is that also part of the aim?
Look at I think there aren't many people producing. I mean, I think that really there's just a couple in the United States that are producing right now. I mean, look at Cameco in Saskatchewan in Canada. They shut down the largest, one of the largest, highest grade uranium deposits called McArthur River in Canada about a year ago. And that reduced Canadian production by 50%. Even Cameco is out buying uranium because it's cheaper for them to buy it and sell it into contracts than it is to produce it. And I think that goes back to what I said, that the true value of producing a pound is much greater than current prices. And even though there's no guarantees on the Section 232, we think there will be some positive relief. And we think that, we would rather hold that inventory and place it at a time when the price is higher.
I mean, you're sitting on a lot of cash. Are you going out to the spot market and acquiring pounds that way, or are you continuing to mine your own?
No, and this goes back to my earlier comments about some of my lessons learned in terms of being in this business, is having a strong balance sheet and making sure you don't run down too much on your cash. So, that's just a change of philosophy, how we're operating the company right now. Not that we ever expect any kind of blunt trauma, but it does happen in this business. So we're trying to keep ourselves really healthy position here. But those funds also can be used hopefully when the gun goes off to be employed and help develop the projects that we have currently and ramp them up.
Right, so I guess from some of the comments you've made, you'd look to sell all of that into the US market. Would that be the case?
With the Section 232, we're looking at the relief being for U.S. Producers, selling uranium into the U.S. market. Now, that doesn't mean that we won't sell outside the United States.
Right.
Generally speaking, you don't contract 100% of your production. Usually it would be a reduced percentage on that to have a bit of a contingency, and then maybe speculate on 20, 30% or something of your extra production. We're we'll be producing for the global market, but with Section 232, there'll be a substantial major influence on U.S. production if we get relief.
Right, okay. And do you see much competition? You mentioned earlier that not a lot of people are in production. You've got a lot of players. Well, I think the market's been sort of decimated in the last 10 years. But do you see any production coming into the market which may restrict pricing, or is that not a concern for you?
Look, I don't think anybody that is dealing with the economics of producing uranium is trying to produce more uranium at this point in time. There's one exception is the Chinese. The Chinese have a very large project in Namibia called Husab that they're trying to ramp up. That is not an economic project in this market. The reasons we filed the Section 232, the state-owned enterprises, it's not about economics, it's about producing product. Doesn't really matter what the costs are. But most others have reduced production, globally, around the world, because the price of uranium is too low to justify new production.
Excellent. So again, if I'm putting my investor hat on, I'm looking at some of these smaller exploration uranium plays. I should be approach those with some sense of caution, is what I'm hearing.
The exploration plays are riskier because they're early stage. Like in our case, we have multiple properties that are permitted, constructed, and in some cases operating right now, and paid for. When you start a new project and you start going out and trying to look for, financing for those projects, there's a lot of technical risks to new projects. One thing people don't fully appreciate, better than 50 to 75% of new projects will fail.
That's true of mining. Is that also more true in the case of uranium?
Look, you're right. It is true of mining as a whole. I mean, if you look at the statistics of what projects actually fail, look, I think it's probably higher with uranium because I think that the technical aspects of uranium mining, even though they're understood, they're lesser understood than some things like gold and copper. And then you get the kind of the emotional issues attached to uranium and the nuclear fuel cycle. I mean, you get certain projects in different countries or in Europe, and then all of a sudden people can't get their permits for whatever reason. And a lot of that, I would say, is because of the fact that they're uranium projects.
Thank you very much for covering off the uranium component. I know you're a company with many opportunities ahead of you, not least of all the vanadium component. Do you want to tell us a little bit about that? You're, again, #1 producer in the US.
Only producer.
Number one.
One and only.
Okay. So I'm guessing, where do all your sales go?
Look, I always tell people, first and foremost, we're a uranium producer. Now, we need higher uranium prices to really push the uranium production back up. But we're blessed to have these other opportunities like vanadium as an opportunity to generate revenue, particularly when uranium prices are down. Our company has or at least the assets of the company have a long history of producing vanadium. So this is not new. When I said I started as a miner, I was working in uranium vanadium mines back in the 70s. So this goes way back in the early days of my career. So the vanadium, we haven't yet announced sales of vanadium. We're looking at a number of different potential purchasers around mainly the United States, but it can be outside the United States. Vanadium had a big run last year, up to nearly $30 per pound. It's retreated down into the $16, $17 a pound range, but we are very shortly we'll be selling vanadium. We'll be coming to the market with with more information on those sales. So, but as I said, it's secondary to uranium.
Right. So what portion of the business will the vanadium component represent?
Well, I mean, look, the uranium component of our company is in the order of 150, 200 million worth of revenue. The vanadium component, when there's higher prices, that's kind of the opportunities. 150, 200, 250 million, something like that, depending on prices and production. The vanadium component in some of these other businesses we have, like recycle, it could be 40, 50, 60 million, maybe a little bit more than that. So it's definitely a smaller percentage, but it is quite substantial, when we're not producing the uranium. So, but a lot of the other uranium producers would die to have secondary or third tier businesses that would generate in the order of $50 million.
Sure. And so what's your view on the vanadium price? Obviously, it's about 7 times higher, even at today's prices, than it was 3 years ago. Is there going to be some sort of stability to the pricing?
Hey, with vanadium, nothing's ever stable. And that's one of the tricky parts of the vanadium business. It's a wild ride in the vanadium prices. And so everything we do with our vanadium production is geared towards understanding that it is volatile. And we think there's some new fundamentals in the vanadium space that didn't exist a few years ago. One of them is these new rebar standards in China, which are putting a big demand on vanadium production in China. The other thing is that a number of highly polluting production sources have been shut down by the Chinese government. So there's been this demand and supply demand pinch. And then emerging is this vanadium flow redox batteries are starting to consume more, but even though it's a small percentage at this time. So we think there's maybe a new paradigm that some of the low pricing of vanadium going forward, will be it'll be a higher level than the past lows. But having said that, we still expect it to be very volatile, as it has been this last few months. And we plan to produce while the price is high enough to generate substantial cash flows for the company.
I guess that's an ongoing monitoring process around the economics or optimization and so forth.
Yeah, we've got a couple phases that we're working on. Number one, we call it the recovery of vanadium from our tailings facility. We call it pond return. That's what we're currently producing from. It costs us about less than $2 million to start that up, but we can literally stop that by shutting down the pump. So it's we're not having a lot of exposure there. Yeah. Looking from getting overcommitted in terms of capital, but we're also looking at some improved mining methods at our conventional mines. We're doing some test mining right now at a couple of our mines in Utah. So, but again, when I say that I look back on my history in this business and successes and failures, we're going to try to be smart about how we approach the vanadium market. And I think we are being smart.
Just give me a sense of sort of the types of, on tailings, for instance, a couple of $1 million, doesn't move the dial much, but what would you expect to return on that?
We haven't published to the market what we think our cost of recovery from the tailings pond returns are, but I can say that we started looking at recovering vanadium from the tailings facility when the prices were $12, $13, and we thought we had a very good margin at that time. So right now with prices at 16, 17, we feel it makes good sense to keep producing. So. But no, we're looking at being competitive globally, long term, with our vanadium production costs. But if you have a drop like a couple of 2-3 years ago, $2-3 a pound, very few people could produce at those prices.
It sorts out the wheat from the chaff. Can I just ask you about one of the other investment themes that you talk about, which is the alternative feed materials, the land cleanup, and also copper recovery. Now, I imagine these aren't substantial, contributors to the bottom line, but that nevertheless, they're themes that you want to talk about. So, what are you doing with those?
Yeah, look, let's start off with alternate feed. Historically, and we've been doing this, or the asset's been doing this for like 25 years. Generally, it is between $5 to $15 million a year of revenue. So it's not huge, but it's nice plasma, and particularly in the down market. To give you an example, last year we recycled the equivalent of one fuel load for a nuclear reactor. We recycled, and we have the facilities and the permits to do that. A year before last, it was 2 nuclear reactor fuel loads worth of material. So it's a great service we provide out there that nobody else does. We're looking to expand that. So this 5 to 15 could be greater than that in time. But that's really, and I'll talk about, so we've got this recycling business, taking low-level products and creating clean nuclear fuel that we've been doing. But we're also looking at expanding that. When we call the land cleanup, there are a number of former uranium mines that need to be reclaimed. A number of them are on the Navajo Nation. They were mined during the Cold War in the 50s, 60s, and 70s. And the EPA has collected about $1.7 billion in trust to clean up those mines. The White Mesa Mill is located maybe 20 miles from the Navajo Nation border, and we have all the permits required to assist in that cleanup. So, even if hypothetically we got 10% of that 1.7 billion or 5% or whatever, you're talking a lot of money. Yeah. And if you complement that $5 to $15 million in alternate feed, you look at a nice secondary or third tier business for us, and doing a good service to the environment, to the Navajo Nation, and through that recycle, we're actually able to recover uranium from those low-level, low-grade ores that were mined from those deposits. So I'm really proud of that part of the business. I think it really shows the company's committed to kind of the cradle to grave principles, and we're the only ones that can do that that I know of in the world, but certainly in the United States.
That's impressive. I mean, it also helps with the clean credentials.
It does help with the clean credentials, and I like to emphasize that during the Cold War, the U.S. government would buy uranium from anyone who would sell them the uranium. So, a lot of these mines are remnants of that period, and that was a time when there were no permits required. They weren't required to reclaim, and literally the miners just went out and started digging.
I'd be interested in hearing more about that story as it develops, because that's potentially a very large business in its own right.
Yeah, that's right. And as I said, we're still able to produce uranium, while we're treating that kind of material. Now, we haven't done any of that business yet, but we think we're ideally placed. We have a very small but very high grade copper deposit at our Canyon mine. And we've been doing test work to determine if we can recover that copper. Test work says we can. It is a small deposit of copper, so we've got to look at the balance between the capital and operating cost, and perhaps getting some new permits to actually retrofit the mill to recover that copper. So, again, it's just another option that we're working on, and not completely clear at this moment how we go forward with the copper. So, it would be the lowest priority after vanadium, after the alternate feed and land cleanup, but it still is an option that we're evaluating.
Tell me about the financial position of the company in terms of, cash, shares, shareholders, etc.
So, we have, in the order or north of 50 million US in cash equivalents or inventories. As I said earlier, we plan to keep that strong position. We have about $16 million of debt, it's convertible debt that matures at the end of 2020. We're currently considering how we best address that debt with a market cap of around 300 million. The 16 million we think we can easily handle in different ways. We have about 91, 92 million shares on issue. Our share price as of today is around 325 to 330 US per share. We were the best producing uranium stock in the world in our peer group, and this was kind of not the Camecos, but between companies that were 50 million market cap to say 600 or 700 million, we were the best performer last year. We made the Russell 3000. We made that in middle of last year. That increased our liquidity by 3-4-fold. That also allowed a number of other larger funds to come in and invest in the company. So we made a lot of progress last year. It was a very important year for us. And all I can say is I'm a competitive person. I plan to do it again this year and next year. I want this company to be the darling investment. I want it to be the emerging equivalent of the uranium ones or the paladins, but I also want to position it to where it is sustainable. And it is my goal to pay a dividend. You never hear any of these companies talking about dividends, but that is my goal, to pay a dividend as a small uranium producer going forward.
Based on that, you think there's enough value in the shares of this company for new investors to come in and make money on the up? Is it entirely predicated on the price of uranium rising, or do you think that there's other value that you can create even if that doesn't happen?
Yeah, look, no, there's absolutely large upside, huge upside. Section 232, I tell people, don't buy the company just on that sort of that kind of hype that's building around that right now. Buy the company on the fundamentals. The global demand for uranium is increasing. The price uranium has to go up on its own without Section 232 relief. It has to go up because otherwise the industry will not be sustainable. And I think that will happen on its own without Section in a few years, a year or two or three. So buy the company on the fundamentals. When I worked for, I worked for Paladin Energy, and their share price, and I'm not saying this will repeat itself, they went from less than a penny to $11 per share. Now, that was remarkable, and they unfortunately got caught after Fukushima with debt and no long-term contracts, and they went into administration. That was, again, unfortunate. So, and I'm not saying we're going to go up like a Paladin Energy. That was so very, very unique, and the timing of that and the position of that. But this company, I believe, is going to be a multiple bagger. I'm focused on making this company a $1 billion plus company, and that gives plenty of opportunity for people to come in and capitalize on that with improved uranium prices. Now, having said that, I mentioned these other businesses we have. I look at those as kind of insurance policies. They provide us revenue. This company will not go to zero because of the fact we have these other businesses that we will develop, sort of multitask and develop these to the extent possible, with or without the price of uranium price, or without higher uranium prices.
That's great. Can you give me 5 reasons for investors to believe in the growth and success of your company?
All right. Number 1, we have more properties ready to go, 3 fully permitted and operable production centers than anyone out there in the market. We're the only company that has vanadium production, and we're looking at expanding that over the next few years. But again, secondary to uranium, we've got these other businesses that we have, the alternate feed and the cleanup, and we have a very strong balance sheet. We're well positioned, we're ready to go, and we've got a management team that is the most experienced in the sector in the United States, and I'm committed to make this a real success story and the darling going forward. So if you're interested in uranium, you need some Energy Fuels in your portfolio.
Perfect, thank you. I want to ask you to give yourself a report card for last year. You've talked about where you want to go. How well did you think you did last year, and what would you have done differently?
You know, I'm proud of what we did last year, and I think we're really on the radar screen globally on what we did last year with our share appreciation, how we positioned the company, how we strengthened the balance sheet. So I give myself high marks. Now I'm one that if I thought that I should give myself a negative, I would do that. So I think it's just, I want it to be just an indicator of how we're going to go forward in the future. Do smart things, not dumb things, and just watch this space. So I'm very confident what we're doing. I'm having the time of my life because I'm able to apply both my passion and my experience to the best positioned asset in the world in this space.
That's great, Mark. Thanks very much for your time. I appreciate you taking time out of your day to tell us about Energy Fuels, and we look forward to hearing more soon.
Thank you very much, Matthew.
Cheers. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.